Okay, everybody, it's me, Gregory Mannarino, and I'm laughing. I'm laughing yet again. Why am I laughing? People, we have a lot to talk about, so sit back, get comfortable, and just relax. So yeah, this is my post-market wrap-up on this Tuesday, February 8th, 2022. The reason why I'm laughing is yet again we are in a scenario, no surprise, I don't think, to anyone, where the market seems unstoppable and invincible. Let's backtrack a little bit. If you recall, not too long ago, 2021, this stock market hit more record highs than ever before. Then we went through this little rough patch. I don't know. Sounds like a feminine product to me. Whenever I hear someone say rough patch, I don't know why. That's just the way my brain works, I guess. I told you, being me takes you to some strange places, people. Anyway, with that said, we went through this a little bit of a turbulent period where all the market was doing was correcting, a normal corrective phase. I told you that from day one. Meanwhile, you had people freaking out, ready to jump out windows. This is it. It's the big one. No, no. I kept telling them no. They kept telling me I was wrong. And yet again, well, looks like I nailed it. People, look, this market's not for everybody. And if you're going to panic over normal corrections in the market because you don't know what you're looking at, you don't belong here. You should get out. Because this was nothing but opportunity for me, for my Lions, for those of you that follow this blog. And we have a lot more to go. A lot more to go. I got your back, and I know you got mine. Anyway, so a rally across the board today, despite the fact that we got more bad economic news, several rounds of more bad economic news today, which we will cover, despite the fact that the 10-year yield, 1.96, and the relative strength of the dollar continues to gain, market don't care. Going higher, like I said, rally across the board. Even the small caps, the Russell 2000, put on nice gains today. As a matter of fact, let's talk about small caps a little bit because I get bombarded with questions regarding small cap stocks. Why? I don't know. Because I'm a large cap guy. I talk about large caps. People should own them. People should collect the dividends. I will remain a non-small cap guy for as far as I can see, at least in this current environment. Why? When we're talking about small cap companies, first of all, I'm referring to small cap companies based here in the United States. I don't like them because the U.S. economy is cratering and there's no end in sight. We've never seen an economy contract faster than we are contracting today. Meanwhile, you listen to the propaganda ministry, oh, we're doing great. We couldn't be doing better. Nonsense. Debts and deficits continue to supernova. And that is the only reason why the illusion seems real. Oh, but it's not real. Again, more bad economic news today. We found out that small business sentiment cratered to a nearly 1-year low. Borrowing costs for the average guy and the average girl are skyrocketing. We got warnings today from Bank of America. We got another warning today from a former Fed president, which we'll talk about in a little bit. But we'll get to there. Let's go back to this freak show market. So I don't like small caps for that reason. The United States economy is in free fall. Why would I want to own a company that is doing business, for the most part, in an economy that's in free fall? Large cap companies, well, they're multinational. The globe is in an economic free fall, but these companies, more specifically people, the banks, because the banks run it all, they are positioned to take advantage of what's going on here. Now, you can let the freak show destroy you, or you can take advantage of it. Okay, you can lay back like a sheep and get sheared and complain about people like me, for example, who take advantage of the market, or my Lions. Meanwhile, they sit there and they transact in that fiat bill. They're supporting the debt-based system, the beast system, the slave system. That's okay. But a guy like me, or one of my Lions, or we're the bad guys. Oh, we're the bad guys. Make it up. I dare you. So anyway, that's my take on why I don't like small caps. If the U.S. economy were really booming, I would be all over small caps. But the fact of the matter is, it's just the polar opposite with no end in sight. You can expect debts and deficits to continue to balloon. As the illusion is forced down your throat that it's real, but it's not. It's absolutely not real. Anyway, with that said, let's move on. Bitcoin still around 44,000, doing well. Gold and silver catching a bid. Crude oil under pressure. No surprise. I've been waiting for this for weeks. I've been saying that crude oil energy needs to pull back, but I also told you that's a double-edged sword. I don't like the fact that we are going to get a pullback here. Why? Because it's bullish. Energy will pull back. Crude will pull back. We're going to get a new floor, and it's going higher, much higher. That's how markets work. I don't know how many times I have to tell you that. Anyway, let us move on here a little bit. You know what? Let's talk about this real quick. Like, I have a bunch of stuff that I want to talk about. So borrowing costs here in the United States are surging. Actually, it's a global phenomenon, but let's talk about what's going on here. People here in the United States are doing something very, very wrong. We're seeing consumer credit, consumer debt, household debt, personal debt soar at their fastest pace in history, higher. A phenomenon I told all of you would happen, okay, as these people who used to be middle class are borrowing to make it appear like they still are middle class. Meanwhile, like I had just said, borrowing costs are surging. Now, let me ask you a question, just between you and I, since no one else is watching. Do you think it's fair that borrowing costs for the average guy and the average girl are soaring? Meanwhile, institutional borrowing between each other or banks is nearly at zero. Now, I don't know about you, but I don't think that's fair, nor is it meant to be. Again, there's a whole new set of rules, a whole new paradigm, a demographic shift. There's two-tier society, but that's just the way it is. If you're an average guy or an average girl, they're going to suck you dry. If you're a big institution, well, you're going to be sitting pretty. Speaking of that, let's go look over at the Federal Reserve and the warning that we got today from a former Fed President, Tony Honig. This is what he said, quote, all right, wage earners are going to be left behind as inflation continues to surge. Now, going back to borrowing, these people, regular guys and girls, borrowing beyond their eyeballs, but they're getting less for it because the value of the dollar is evaporating. Inflation. It's a terrible situation, but that's what's happening. And don't believe for a second, people, that this is by accident. None of it is. Nothing you're seeing is by accident. Anyway, while we're on the topic of the Federal Reserve, I want to bring something else to your attention here. This got a little news last week. I didn't talk about it, but we'll talk about it right now. It's no secret that Fed presidents, a whole bunch of them, got caught insider trading. Nothing happened to them. Zero. We had a couple of resignations. We had the vice chair himself get caught insider trading. All he did was resign and get to keep all his ill-gotten gains. Now, it's no secret as well. The Fed chairperson himself, Jay Powell, the chairman, also insider trading. Now it's coming out that it's much bigger than we were led to believe. The Fed chair was apparently trading on inside information, okay, lying about dates, lying about the sums, lying about what he was actually trading. Now, let me ask you while we're on that topic, do you think for a nanosecond that the Fed chair will be arrested? Do you think he'll get in any trouble at all? No. So don't sit there and hold your breath waiting for it. Again, it's them in many ways, and then there's us. All right, these people are invincible. They're untouchable. They can do anything they want to, and nothing ever happens. Just get used to that. That's part of the new economy. The new economy. Remember that. The new economy. Anyway, let us again move forward here. So not only did the market shrug off all the bad economic news, we're shrugging off bond yields. was shrugging off the rising dollar. All we had was a normal corrective phase, people freaking out, blah, blah, blah. I told you, once you get rattled, you make bad decisions. I bet you a lot of these people either got out of the market, went short the market, probably got destroyed. Meanwhile, those of us, you and me, that recognize opportunity, well, we're doing fantastic. And meanwhile, we're going to get condemned for it. We're going to get condemned for doing the right thing. Make that up. All right. Anyway, let us move forward. I want to talk about Bank of America. So we got a warning today from Bank of America. Now, before I move forward with the warning, what have I told you every single time we've had a warning from a Wall Street superbank? I've told you to ignore it. Now, I'm going to tell you to ignore this one as well. Last year, Bank of America was part of those group of banks, super banks, that was warning on the market. And what did we get? More record highs for the market than ever. So we got another warning today from Bank of America, but it's kind of it's interesting how they worded this and how it played out. So this is Bank of America warning again that there are several red flags for the market, quote, as the Fed is preparing to raise rates. Think about that. Because out of the other side of their mouth, this is what they're saying. However, there is a larger risk to equities if the Federal Reserve does nothing. Now, does that sound familiar to you? You see, because this guy right here has explained to you that if the Fed does not act in March and raise rates, this market is going down. So now you have a Wall Street superbank telling you what Greg Mannarino has been saying. Look, with regard to these banks, like I said, they're warnings, they're this, they're that. Just ignore it. It's all bullshit. It's all dog shit. And they're not going to tell you the truth anyway. Okay? So I don't think many of you listen to this stuff from the banks, and you understand where their heads are at. All right? But that doesn't mean we need to lose. We should be in these banks. Absolutely. JP Morgan, Goldman Sachs, and of course Bank of America, one of my top stock picks. As a matter of fact, people, starting tomorrow, I'm going to be putting on my website, traderschoice.net, right under the MMRI, you know, the Mannarino Market Risk Indicator, which you should be looking at every day. Right underneath that, I'm going to put my top stock picks. Actually, they might be up right now. It takes a while for the website to update. You can go check it and see if it's there. I've had a lot of requests for this, especially from people that follow my free newsletter. Hey, Greg, why don't you put your stock picks on your website? I did this a long time ago. I'm going to play it a little differently this time. But go over to my website, traderschoice.net. Like I said, maybe it's there right under the MMRI. Look, people, what do I tell you all the time? I got your back, and I know you got mine. We're not going to lose. There's no way we're going to lose. Ain't happening on my watch. I will not allow it to happen. That's my promise to you. I've said this for years, and I think I've kept that promise. All right, people, look, I'm out of here. Love you a lot. Very important video. Please share it. What do you think about the stuff I discussed here with regard to borrowing? How the average guy and the average girl are getting slaughtered. Meanwhile, inter-institutional lending is like at zero. Banks, nothing. Does that make sense to you? How about the Federal Reserve? Do you believe you will ever see a Fed chairman in handcuffs? No. You can count on that too. Things are not what they seem, people, and you know that. And like I've been telling you, you can either let this thing destroy you, or you could at least try to do something about it. And I hope you are a person of action, because this channel, again, is for freaking winners. I'm out of here.